everyone, today we're going to cover conforming loans and jumbo loans, and we're going to talk about what the difference of those two are. This has been a question that has come up with a number of clients that we are helping buy homes and also that are getting ready to build homes and wanted to address this. So what is the difference between a conforming loan and a jumbo loan, and how will that affect you? So the first thing is there is a conforming loan limit that is given. It's updated typically every year. The government will update this number, and it's very specific to the location and where you live. So if you're getting ready to build in a certain area or buy in a certain area, you want to know, actually look up specifically that county. So if we're talking San Diego County, you would look up San Diego County conforming loan limits and then put in the year, so 2021. So if we were doing that this year, we would have a conforming loan limit specifically to San Diego County of $753,250. It's 2021. Now, the actual conforming loan limit for California is $548,250. So a lot lower, $200,000 lower almost, for California is compared to San Diego County. So there's higher price markets like the San Diego County market, and those are going to have a higher conforming limit, loan limit that you can go to. So now, what is a conforming loan limit? That's the limit that they put on. It's a guideline. So the lenders that are Fannie and Freddie, they can sell those out on the open market. They meet Fannie Freddie guidelines. So they're able to resell those after those loans are given out. So they need to abide by certain underwriting guidelines as well as a loan limit. And when they do that and they stay at or below that conforming loan limit, they're able to package those and sell them. So that's what that limit is for. When you exceed that limit, you're going to be looking at is what's called a jumbo loan. And the jumbo loan would be anything above that. So when you get into the jumbo loans, you're going to pay a little bit more in your rate. So today, roughly, the rate is about 3, just a little above 3 for a conforming loan. And you're right now, the jumbo loans you're paying about 1/10 of a point more. So you're at about 3.13, 3.15 roughly. So, and where the conforming loans are 3.03, 3.04. So there's a little bit of you're going to have to pay a little bit more for a jumbo loan, and then you're also, a lot of times you'll pay a little bit more points on the front end to get them, and then the underwriting guidelines are going to be a little bit tougher. So they're going to look for more reserves, they're going to look more at your employment and make sure that you are more of a solid borrower, and you'll be able to, so that way they can sell that as well, but they're selling to somebody else, so they have to make sure that meets their guidelines, and they're a little bit tougher to meet. So that is kind of a brief rundown on that. So to recap, we're going back and we're going to say that the conforming loan limits for California, $548,250. Those are going to be the lowest conforming loan limits in any of the counties in California. And then it will increase upwards depending on the area. So like San Diego County, $753,250 conforming loan limit. Anything over that is going to be a jumbo. So make sure you check your area where you're at. Check the year specifically, because that'll adjust every single year. And then make sure you check with your lender, because you're going to want to make sure the points, check the rates on a conforming versus a non-conforming loan, jumbo loan, so you can determine if it makes sense to, if you're building a project, that you need to stay below a certain limit in order to qualify for your loan. So, all right, so I hope that helps. If you have more questions, visit our website at tfgonline.com and get a ton of information on building custom homes, ADUs, or remodeling your home. So thanks for your time and have a great rest of your day.